Hey guys, what is hotter than summer in Phoenix? The Phoenix Suns going to the finals for the first time in 28 years. And we're gonna rally the valley right now as I share with you your July Phoenix market update. Hi, I'm Maegann Yarbrough. I am your AZ real estate geek. I'm a realtor here in the Phoenix metro area with eXp Realty. So before we go into the numbers this month, I just want to say a big thank you to my subscribers. If you haven't already, hit that little red button down there to subscribe. I'd really appreciate it. Be sure to like and share. Besides our market updates, we have neighborhood tours, home tours, and fun and exciting things to do in Phoenix. And I plan to get a lot more videos out to you here really soon, so be sure to subscribe so you don't miss any of those. The numbers I'm sharing with you today come from the Arizona Regional Multiple Listing Service. So basically, it's the whole Phoenix metro area that we're covering here. In June, we had 10,213 home sales. That is up a little from the 9,700 sales that we had in May. So that's great because normally we have what's called a summer slowdown in Phoenix and most of the country where people take a break from buying homes because they're going on vacation, they're spending time with their family, and they're not just out looking for homes. As we get closer to fall, that is when people start being a little more aggressive with buying a home because they want to get their family into the new school district that they want to be in. Surprisingly too, the home sales are up from June of 2020, where it was about 9,700 last year. So sales didn't really slow down last summer, and we're seeing that same trend happening now. And again, a majority of these sales are in the 300,000 to 500,000 range, although I did see a tick up in the 550 to 750 range. There was about 1,300 sales in that range alone. The median sales price dropped a little bit in the last month. It's down to about 397, which is down from the 440 that was in May. That was kind of an astronomical number. So we're seeing the median prices dropping a little bit. I don't know how consistent this will be. We'll keep an eye on it, and hopefully we start staying under that 400,000 mark for a while. And this is compared to June of 2020, where the median home prices were about 305. We had 10,742 new listings come on the market in June, which is about the same as it was in May, but that is up from the over 9,000 that we had June of last year. This is promising. It means that there's more listings going on the market, which means that inventory is hopefully opening up a little bit. Based on what I've seen, we are seeing a slight increase in inventory, but it's something like 1%. You're not going to feel much of a difference right now. And we're going to talk about that in a little bit on how we can get more inventory and more affordable homes on the market for everyone. Active listings in June, we had 9,232, which is it's close to what it was in May. But that is kind of a big difference from what it was in June of last year, when we had about 12,000 active listings in June of last year. Again, last year in the summer, things were a little crazy, and numbers based in 2020 are going to be a little skewed just because of what was going on still with the pandemic. Pending sales in June were 6,283, which took a tiny little dip from the numbers in May, and definitely different than the over 10,000 pending sales that we had in June of last year. Average days on market are still dropping. Our average days on market right now is 25 days. That is down from 27 days in May, which is a big difference still from the 55 days in June of last year. So the average days on market are dropping. This is kind of a big deal because houses are still moving at a rapid pace and they are selling fast. We have a lot of cash buyers. We have a lot of loans that are just going boom, boom, boom. But mostly what we're seeing is as soon as a house goes on the market, It only needs to be on the market a day or two, and it's got several offers, and it gets sold pretty darn fast. So the average days on market is definitely dropping. This also reflects that homes are being priced accordingly. Usually a longer time on market means that the home is priced too high. As we can see in this market, a lot of homes are going above list price, almost exactly 100%, even like 101, 102% over list price. So for pricing homes correctly, then they're being sold right away. And yet there are the bidding wars, they are going over list price, but you know, that doesn't happen if it's overpriced. So we're making sure things are priced accordingly. Our absorption rate is staying around the same. It's 0.97 months, so about 30 days of inventory, which means that, again, all the homes on the market, if no more homes came on the market, everything that is out there would be sold in 30 days. So that hasn't changed too much. A normal market is about 6 months of inventory. When you are less than 6 months of inventory, you are in a seller's market, which many of us know we are in a seller's market right now, an extreme seller's market. So right now it's still hovering at that 30-day mark, which is great, and we're gonna keep an eye on that, and hopefully that starts ticking up here pretty soon. What we're seeing right now is basically buyer fatigue. You know, their buyers are going out there and they're trying to buy homes, and they're putting offers in, they're not getting the homes, and they're just kind of like, I just don't want to do this anymore. Or they're scared of the market. They take a look at all the news and everything that the major news networks are saying, and are too scared to even try. So with this, what I'm seeing now is the index that I follow is showing that we're technically in a normal buyer demand market. So like the buyer demand is actually back to normal. It's still the seller and the inventory demand that's really skewed. We just don't have enough inventory yet. So as the buyer demand goes a little more away from normal to where the buyers do not want to buy houses as much as they do right now, it'll affect how the absorption rate and the inventory looks going forward. In mortgage news, the interest rates are starting to go back up a little bit. So right now, as of today, I saw it at 3.18% is your average 30-year fixed mortgage rate. So it is still a fantastic rate. It is still a good time to buy to get that rate. I'm telling you, it's still a good time to buy. I will keep saying that no matter how crazy this market is. But what we're seeing is that mortgage applications, so people that are applying for a mortgage either for a new purchase or refinance, are dropping. People are just not filling out as many applications, and they're actually at an 18-month low on applications. So this is kind of interesting because again, it's probably going back to the fact that buyers are just kind of not wanting to try right now. There's that. But it's still a fantastic time to refinance. If you haven't refinanced your home, if you've been in your home at least a year, I would reach out to your loan officer. If you want me to refer someone for you, I definitely would. And talk about what your options are. You could save a lot of money on your payment. You could lock in that lower rate. It's pretty amazing. So if that's something that you're interested in, definitely go for it. There's also been a lot of talk about the foreclosure moratoriums and how mortgages are in a forbearance situation. And actually only 2% of Fannie Mae and Freddie Mac backed loans are in a forbearance situation. So a pretty small percentage overall. So it's not the doom and gloom that a lot of people are thinking. There's not going to be this big wave of foreclosures that everyone's going to wait for, where the inventory is going to open up. It's just not working like that based on the numbers. The median lease last month in the ARMLS was $1,900, and the average lease was about $2,057. That's based on rentals that were actually compiled through the multiple listing service. In national news, the National Association of Realtors released a report earlier in the year. It was called the State and Local Policy Strategies to Advance Housing Affordability. And basically in this, they're proposing to lawmakers on changing some of the fiscal policies out there to make homes more available and more affordable. That's one of the struggles many people are having right now, is that they want to buy a home. It's still an American dream, but they're just not able to with the income they have right now. And incomes have not risen as fast as home prices. So they're trying to come up with solutions that we could probably integrate in policy to make homes more affordable. So some of these policies that they're introducing is increasing down payment assistance. Down payment assistance is really, really helpful. I've had a lot of clients that have used it. Some mortgage lenders have these programs. Some are federally backed, some are state backed, some are private. And a lot of the times it's given to you as a grant, where eventually, like over time, you're kind of paying that grant back within your mortgage. So you're not feeling it within your mortgage, but that money can come as a down payment so that you can have a more affordable mortgage going forward. Or if it's just not feasible for you to be able to save a substantial down payment, that would make a more affordable mortgage for you. So they're looking at finding more assistance toward that, which would be a big help. They're talking about going in and fixing zoning and policy, like making some reforms there, because a big part of the cost of building a house comes from just the fees that have to be paid when you are zoning a property or going through local governments and getting everything approved. There's a big chunk of cost that comes in there. And if we can do some sort of policy reform, that will make the cost of the home lower, which will be passed on as more affordable to the buyer. They're also trying to introduce some incentives for skilled labor to build these homes. We're still in a shortage of skilled labor to construct homes, which is slowing the home construction process. If we can give some incentives to skilled labor to come into construction and build those homes, that would help a lot, so we can build them faster and more affordable. They're also talking about increasing shared equity models. So shared equity models are very interesting. There is a housing development in Tempe right now that's called Tempe Micro Estates that are being built right now. They're about finished with construction. There's 13 units on a shared community property, and the shared equity model basically allows for people to have kind of a buffer on their down payment when they move into the home. And if they decide to sell their home, then part of their equity basically goes to the next buyer. It's a shared equity into the community, and it sounds a little different, but it's actually really good, sustainable model, because it makes these smaller homes more affordable so people can get into their first home, build some equity that they can take with them and move on to a larger home or something different down the road. But at least it gets them where they can start building that equity. So it's a great model. It's a really good solution if we can get more properties set up like that. Also in national news, iBuyers are back. iBuyers are buying properties at pretty much pre-pandemic levels. So an iBuyer, if you're not familiar with an iBuyer, these are companies like Opendoor, OfferPad, Redfin, Zillow, and what they do is they give a seller basically a cash offer on their home, so that the seller can just take the offer and run, and the iBuyer then will renovate the home and then resell it. So it's kind of like a larger company that does fix and flip properties. So it's an investment, and it's a business model that was very successful a few years ago. And Arizona was flush with iBuyers. We had them, and it was a good market for it here because we were affordable, especially compared to the rest of the country, because these iBuyers are national companies. So the profit margins look good here because they were affordable. And the speed of our market moves very fast, and it's easy to buy and sell a home here. So it was just a great market. So they're back now, and it kind of slowed down, especially during the pandemic levels, because it was really hard to predict those models and what it would take to buy a home and then sell it for more than you bought it for, right? That's essentially what a fix and flip is. But with the home prices going up so high and sellers are expecting premium prices for their homes now, it just wasn't a great market for iBuyers, but they're back. And the model does work because on average, just in the Phoenix metro area, iBuyers pay about $20,000 less on their median price that they pay for than regular buyers. So they're still getting the deals. Now, do a lot of research on the iBuyers if you want to. I maybe should do a separate video on them, but I will tell you they are a great option if you need it for convenience. But you have to think of it kind of like a convenience store. And what happens at a convenience store is that you pay a lot higher price for the convenience. You pay a higher price to have your food delivered to your house than if you had to go pick it up yourself, right? So you're paying for the convenience. So an iBuyer does charge a higher fee to buy your house, and they're buying it for a lesser price. So ultimately, you're not gonna get as much money when you sell your house to an iBuyer than if you were just to put it on a regular market. But if you don't want the hassle of showing your home and keeping it clean and having people walk through it and reviewing offers and trying to figure all that out, it's an option. But if you want the most dollar for your property, that's all I'm gonna say about that. So that's my update today. It is short and sweet. There's not a lot of change going on. Inventory's low, prices are high. Hopefully things are stabilizing. We're seeing small amounts of change, but nothing that you can feel yet. As a realtor, I can feel it. So what do you think about some of these home affordability ideas that NAR is trying to get changed through policy changes? And what do you think about iBuyers? Do you think they're a good business model for us right now? Comment below, let me know. I'd love to see your input. And if you have any questions on any of this content or in real estate in general, please drop me a line. My contact information is right here. And I'd love to talk to you. Until next time, stay geeky, my friends.